Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Two major banks recently announced programs to eliminate barriers to home ownership in diverse communities and give credit access to people with limited or no credit information. Are these programs enough to fix the woeful legacy of equity problems persistent in the U.S. banking system? Joining me to discuss is Kate Hao. She's a founder and CEO of Happy Mango, a consumer credit risk technology company that works with banks and credit unions to improve financial inclusion for underserved communities. Kate, it is great to have you with us in studio. Welcome back to Trade Talks.
Thank you for having me.
How would you rate this move by major banks to close the credit gap?
Well, I think this is definitely a step forward in closing the credit gap. If we look at the structure of these programs offered by Bank of America and the city, very small down payment, and the eligibility is not based on the credit score, but based on income and the location of the property. And lastly, the borrowers are required to have housing, counseling, and financial education. So this kind of structure of the program actually has been used by community banks and credit unions and CDFIs in lending to low and moderate communities for years. And now there are these two large for-profit banks are also stepping into this space. It's definitely a very encouraging sign, and this could spark, let's hope this will spark a movement.
So is there a role for community banks and credit unions to increase access to credit for the underserved communities?
Absolutely. Many community banks and credit unions have been doing this actually for decades. They have been the leading force in pushing credit or making credit available to the low and moderate income communities. So now seeing the larger banks, the nation's two largest banks, emulating what they have been doing, this is, I think they definitely, the community banks and credit unions, they deserve a big shout out.
Yeah, they certainly do. Let's talk about technology and how it's breaking down the barriers to access for financial products and how Happy Mango works with financial institutions in this endeavor.
Yes, Happy Mango has been providing the technology for lending to low and moderate income communities since 2016. And through that process, what we have learned is that while speed and efficiency are important, they are most of the time not the determining success factor in this space. Flexibility, the ability to meet the unique needs of borrowers in this space is hugely important. So for example, can you provide financial coaching when the borrowers need it, where they need it? Maybe the payment due date shouldn't be just that one day in a month. Maybe it could be stretched over a few different days and when the borrower actually has money in her bank account. So that kind of flexibility not only helps the borrowers to be successfully paying back their loans, but also ultimately help the lenders to reduce their default rate, expand the customer base, and earn a positive economic return from offering these kind of programs.
All right, Kate, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.